Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Property buyers could be facing their best spring season in years. New research from Domain shows that a rise in property listings and properties spending longer on the market are giving buyers more choice. But what does it mean for prices? Dr. Nicola Powell is Domain's Chief of Research and Economics. Nicola, welcome back to Fear and Greed.
Hello, thanks for having me again.
It's very exciting. Do you get excited ahead of the spring selling season? Because this must be peak time for you almost.
Absolutely. This as well as autumn, but yeah, you do get that kind of vibe of energy. And I feel that actually commences in August because, I think we're all getting prepped and ready for, the boom in spring.
Let's start with new listings. New listings across the combined capitals hit their highest level on record for the month of July, which I think is pretty incredible. Why and where was it so strong?
It is pretty incredible. And I actually think it really showcases the confidence coming from sellers. When you look at the combined capitals, it increased by almost 15% in terms of new listings, are 15% higher compared to this time last year. It is diverse across the different cities. The gains in terms of the strongest annual changes have been in Adelaide and Canberra. Canberra has actually led that increase, almost 34% higher year on year. And then we've seen smaller increases in markets like Hobart, which are up about 6%, and also Sydney up by almost 7%. So there is a bit of diversity, but largely speaking, this is the same trend across all of our capitals, rising new supply.
I think Adelaide's really interesting there, but we'll come to prices in a moment. So what about Melbourne? Why there is still plenty of properties on the market in Melbourne, aren't there?
There are. I think with Melbourne, it has been interesting. I mean, we've still seen a steady stream of new home listings throughout autumn and winter. And when you look at Melbourne, it has consistently topped the 5-year average. I think as well, Melbourne's been really interesting because the buyer profile has been changing. And what I mean by that, demand has been rising from first home buyer activity, but actually investor activity has been dwindling in comparison. And I think that higher level of supply has definitely been testing the depth of buyer interest. And we know that Melbourne is one of those cities that's really struggled to move into a recovery. So I do think it's going to be interesting to see how that spring season unfolds, because I think overall supply has always been much better in Melbourne compared to other capital cities. And it's been one of the foundational reasons why we haven't seen Melbourne really move into a stronger recovery.
Yeah, just as an aside on Melbourne, they had the tax changes. The Victorian government introduced tax changes where investors got taxed more effectively buying in Victoria. Has it played a role, do you reckon?
I do think it has. I think it's very evident when you look at the distribution of investment activity across the different states and territories. And, they are heading to those areas that have seen stronger capital growth. Got to remember that investors are really activated by rising prices ultimately. So they've been going to Queensland, they've been going to WA, and they have been shying away from Melbourne. And it's very telling when you look at that buyer profile. But it is interesting because what Melbourne wanted was an increase in first home buyer participation, and that is exactly what they've been seeing. We have seen a larger share going to first home buyers.
Stay with me, Nicola. We'll be back in a minute. My guest this morning is Dr. Nicola Powell, Chief of Research and Economics at Domain. Okay, so how long are properties typically taking to sell?
It is a bit diverse across the different cities. So some of the shorter days on market are obviously in those capitals where we've got real momentum still within those housing markets. So Brisbane and Perth, days on market for houses is only at 30 days in Perth. But when you look at some of the other capitals, this is where it gets quite interesting. So let's take Sydney. The average days on market for a house is 58 days. But that is increasing. When you look back into, the latter part of 23, it was sitting at 44 days. So what that's telling us is we're seeing a slowdown in momentum. We're seeing a slowdown in the pace of price growth. We're seeing supply rise. And we're now seeing overall the time a home spends on the market is now lengthening. And I do think that when you think about Sydney, I do think that the spring selling season is going to present an opportunity, I think, for buyers. I do think that buyers do have more negotiation power.
So, just take Sydney and Melbourne at the moment then. As we head into spring selling season, perhaps it's just shifted a little bit compared to previous couple of years where buyers have, as you just said, more power.
Absolutely the case. And when you look at some of those smaller areas within Sydney and even Melbourne, we've seen the days on market lengthen quite significantly. So areas like Rouse Hill, McGrath Hill, the days on market is up by almost 40% compared to this time last year. So it's gone from 62 days up to 86 days. Even Hawkesbury, 75 days last year, up to 105 days today. And even when you look at Melbourne, Stonington East, days on market is up by almost about 50%. Whitehorse East, 43%. So some of these real kind of city locations are really seeing a lengthening in terms of time it takes to sell.
So what's it mean for prices then, I suppose? That's the bottom line for most of us.
Yeah, ultimately is, isn't it? And I think this is really interesting because, what a lengthening days on market or a deepening discounting means, and even rising supply, it means that we're starting to see a slowdown in the absorption rate. And I think what it's showcasing is there is a bit of a mismatch between what a seller's pricing expectation is and what the market is willing to pay. And I think that what we are seeing is that buyers have got a little bit more negotiation power in certain areas. And I think what we've started to see in recent months is price gains is losing momentum, I would say, apart from really kind of Brisbane and Perth. So what we're expecting is a slowdown in the pace of price growth. I mean, even when you look at Sydney units prices fell over the most recent quarter for the first time in a year and a half. So I think it really showcases it's going to be a different spring compared to the last couple.
What about the regions generally? And I mean, no need to go into any specific detail, but is the trend, do the regions just follow the cities ultimately, or is there anything different going on in the regions?
Look, largely speaking, they do. I think what we saw during the pandemic was highly unusual because we did really see that flight to the regions. I think what you tend to find is regional pricing does hold up much better. They see more subdued pullbacks in price and they tend to see slower rates of gain as well. I think that has been something that obviously didn't occur since the pandemic because we did see that focus on the regions. But, largely speaking, I think the focus over, the last 12 months has really been on the capital cities. We've seen stronger rates of price growth. And actually, I think in regional markets, we've got some areas that are now moving into that pricing recovery and actually better conditions than compared to what they had been experiencing. But there are many regional areas that are also still falling in price.
Okay. How important is a rate cut or expectations of a rate cut to prices? Because that seems to have gone off the boil in the last couple of weeks on the back of comments from the Reserve Bank Governor Michelle Bullock. What does that mean for the market, particularly given we're heading into spring?
I think it is important. I'd say how I would describe it, it's actually more important for sentiment. I think when sentiment is improving, and I think when you think about the chatter around interest rates has been deeply, deeply negative. I mean, we're in a cost of living crisis. You can understand why Australians are feeling so gloomy. That has an impact on turnover, transactional activity, and how much actually debt people are willing to take on. I think a rate cut is going to be interesting because I think there'll be a pool of buyers that are going to want to get in before we actually see rates being cut. Obviously, when rates are cut, it increases borrowing capacity, but I do think we're going to have to see a few really to kind of see that difference. But I do think what it will see is once rate cuts start, it will improve consumer sentiment. And what that will do is actually increase housing turnover. And I think that positivity will be amplified through the housing market.
One final one, and I mean, I'm sort of harping back a little bit here. We're a year out from a federal election. Housing affordability is already an issue, and that comes down to migration issues and supply issues. How much do you think that will play out over the next 12 months, given houses are on the market for longer, given interest rates might be falling? This is an apolitical comment, so it's not good or bad. It's just how it's going to play out.
I think we have to remember we still have record pricing. So while supply is rising, I think overall there are strong affordability barriers to enter the housing market. And I think that's the key crucial factor here in terms of that conversation around supply. And we still have a structural undersupply of housing across Australia. We're still not building enough homes to meet population growth. Prices are still extremely high. The median house price in Sydney is $1.66 million. trillion. So, I do think that it is going to be kind of a crucial conversation over the next 12 months and more. And, governments are really focused on addressing the supply side for our housing markets. And I think it needs to start with affordable housing.
Nicola, thank you for talking to Fear and Greed.
Thank you.
That's Dr. Nicola Powell, Domain's Chief of Research and Economics. This is the Fear and Greed Daily Interview. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.